Okay, so May 7th, it's 10 p.m. Eastern Time or thereabouts. So we're just going to do a quick rundown of maybe 10 to 12 or 15 cryptos, do some charting and see if there's any opportunities or setups for the rest of the week. Alex has to go. Yeah, the video will be, as soon as it takes a few minutes or maybe a little while to process after we're done, after I stop recording, and then I can post it. So it depends on the size of the video and whatnot. So yeah, as soon as I have it and it's processed, I'll put it on. I always put them on at the same place in the Zoom webinar section. So yeah, let's start with BTC USD. So normally I start on a 4-hour. I'll zoom out a bit to see if I can draw some sort of trend. Now this is not the best to do any trends. I could also go on TradingView because here I don't have a hard line. So let's see here. Right, so I already have it done. This is no good anymore. Need to be on a 4-hour. Yeah, so here it just depends. If we don't use this wick and we go get a third touch here, which it seems to line up our angle as well here, we're broken out and we're either doing a sideways pull or a hook back to our breakout line. Mac, can you?
How's it going?
Good, and you?
Good. Bit tired, but I'll try to hang in for a bit.
Cool. Just be careful not to hit your mic too much.
Okay, sorry.
No, it's all right. So yeah, we're just saying that channel or trend on Bitcoin, depending on how it's drawn, might be broken. So here you see we didn't use the wick, but it allowed us to get a touch here as well, which lines up with 1, 2, 3 touches at the top. There probably would be a hard line too, right in the middle. I'm pretty sure we could do this.
Yeah. So what's it mean when it breaks that down on the channel like that?
Also, if this is correct, right, then, and when I look at my trading view, I had it this way here on Bitfinex. So I had negated the head fake here. And right now it's at the zone 1, zone 2 delimitation line. So, but this one looks fine too. So
it's got some decent sized wicks rejecting to the downside though.
Yeah, but that's because it reached a 3-month PSR.
Yeah, that's true.
Yeah. Like that's from way before. So yeah, it's either doing a bear flag or sideways pull or a hook back to the breakout of the channel, according to this. Now, if we look at our MACD, we had created a rounding top. We had bearish RSI divergence, and we're now kind of going sideways. So that kind of indicates that we're in a consolidation area and potentially going down. Now, we have a lot of wide open space. We have those two little potential PSRs here, swing low from here and swing low from here. That may be small obstacles, but you see that the next big one is here. Then after that, at the double bottom on this PSR. If we go on a daily, for example, you'll see that the double bottom would be also just before the next big PSR that we have, previous support and resistance for those who don't know. So yeah. So right now, and we're almost overbought on the daily. And then if we drop it to a 1 hour, we can see, if we zoom out, clean touches of our hard line all over the place. And break. And now we're creating a bear flag. So I'd at least be careful with Bitcoin. You see that we got close to oversold, and right now showing MACD convergence to the upside. But it could just be because it's consolidating, so giving it more room to maybe make its next push down. So that's pretty much it. Maybe let's see here if we could draw a slope. Seems like that's broken. That's no good. I'm cutting a top. Don't really like it. So yeah, if anything, I'd be looking to look for a short on Bitcoin. But I probably would have to do another smaller parallel channel for the bear flag like this, something like that. Don't want to extend it. I can't not extend it in here. So anyways, that's what it's going to be. And if we had a measured move, if this is our measured move from this to the top of the pole or bear flag, that's have to take out 2 decimals, so that would be $265 or so. And so an aggressive way to take a pole trade or a bear flag trade is at the top of the flag, but that's very aggressive. But that's also where you get your better reward to risk ratio, because you can put your stop loss near the top of the flag. In this case, also above this little swing low here. And then your target is going to be all of the pole or the flag plus the measured move. Measured move, let's say if we were to break to the downside soon enough, 265 would bring us around here, which is very, very close to the 9,000 even number. So that would make sense. And then maybe some fight in that area. If we go back here, we have one at 88.05, 4-hour PSR. So yeah, and you can put those on the chart. What you can also do if you have your fib extension set up is you can do something like this. And it'll give you your fib extension targets. The other thing that we could do, now that's not how I like to do it, but that's also another way. So for example, if we go back and we hook, like if we break this pole and it becomes more of a bear flag, a slanted bear flag, we could go to 382 and then make our move to the fib extensions. And well, if we want to look for a long opportunity, we'll have to wait for the possible retest of that. If you go long right now, you're hitting your head right into the bear flag top and the potential break line that we had here, a fib, a 2-month PSR, and so on and so forth. Not something that I want to fight with. So any questions as far as BTC is concerned? We're good? I'll assume that means yes. Do you guys want to do Bitcoin Cash?
Great analysis there. Thank you.
Thank you, Jason. Bitcoin Cash, we doing it? Worth it? Do you guys trade it? Do you guys...
Bitcoin trash or Ethereum?
So do you want to do it? I mean, it's still practice for charting, right? It's
Yeah.
Might as well. It doesn't take me long anyways. So just try. Okay, so I'm zoomed out enough. Certainly no real trend here. There's not really a trend that I can do. If I zoom out just to see, yeah, big rounding bottom. We're not getting bearish divergence yet. If we go to daily just to see, yeah, not much history there. I'm just going to try a few things here. So if I fib this, I want to see what my pullback was here. So as you can see, we did it. We went to a little bit further than 382 the first time, and they went and tested that 4-month PSR. Then we went back up, tested the fib that we had broken through the first time, rode sideways, and then straight back to the test of the fib for the second time at the 382. And then we did a close in reverse candle. Not a full bullish engulfing, but still a close in reverse. And then we started going up. At this point too, on the second touch of our 382, we were close to oversold, still on a 4-hour. I'm trying to see here if there is, so fib extensions for looking for an up move here could be in this area. My target would probably be where I have confluence of indication that we can reach to at the 4-month PSR with the 1.414 fib extension. If I zoom out, that may also be, and of course, this is an algorithm. The PSR, the horizontal lines, they get identified with, you see things like this, like swing highs and swing lows that get touched multiple times. And the thicker the line, that means that the more often it got touched and respected. Now, I'll remove this here just so I can fib from the very top. Because we've had that pattern quite a few times, that kind of a big falling wedge, ending with the rounding bottom and then shooting upwards. A lot of the alts, a lot of the coins have done that recently. So big correction from December to March, and end of March, start of April, and then started going up. We did have probably a trend line break. It's not clean from there. Don't like it that way. It's iffy. Anyways, we're broken it anyways, but as you can see, if I zoom back in, so let's say I remove my fibs to make it clearer here for my fib extension targets. You can see we're respecting the fibs almost to the dollar or thereabouts. And here we broke through, and of course, as we break a level, we always have to come and retest it, which is what they just did on the 50 here. And look at this. Go through it, test it once, try to go, test it again, and rejection wicks underneath your candles. And these are 4-hour candles. So then the next stop would be the 618, just above here, which is not too far. It doesn't give you that much room. And on here, yeah, RSI topped and it's starting to go down, but it didn't give us a full divergence yet, full bearish divergence. So a little bit iffy there. Don't think I could put a slope on the bottom. I don't know if it's going to be really useful. Could see this, but it's very early. So this could be some sort of, it's a rising wedge, guys, right? Because the definition of a rising wedge is two slopes, two upward slopes moving in the same direction. So even though this one it's pretty sideways, it's still considered a rising wedge. So two upward slopes, rising wedge, two falling slopes like this and like that. However, like, as long as your two slopes are going down, your bottom slope and your top slope, and they're merging, that's a falling wedge. I'll do a quick review here on patterns, might as well. Symmetrical triangle, doesn't matter how it forms. If you have a line like this and a line like that, that's a symmetrical triangle. It can be a little bit more like that, but as long as your top slope is going down and the bottom slope is going up, that's the definition of a symmetrical triangle. Now, those are normally found on bigger time frames, and bigger consolidation areas, if you find smaller ones at the end of impulse moves, like a big upward move, like if you had something like this, and then it gives you a smaller, like little triangle here after a big move in price, then that's called a pennant, not a symmetrical triangle. Important to decipher a little bit, because a symmetrical triangle has no bias, can break to either side, and then you use the measured move rule or a percentage of that measured move to try to figure out your targets, or you use fibs. But other than that, the issue is when people use symmetrical triangle elsewhere, when it's really a pennant, is that a pennant is mostly recognized as a continuation pattern. So if we had a big impulse move up, we do a small pennant, the likelihood is that we break in the same direction we came in, so continue upwards. A little bit like the pole trade and a bear flag trade or bull flag trade, right? They're all continuation patterns. Now, are they going to do it 100% of the time? Can they turn the other direction? Absolutely. So they're not going to do it 100% of the time as a continuation. Maybe like pole trades, we say normally about 80% will be continuations. You can combine those patterns or those trading strategies with some MACD divergence or some RSI, oversold, overbought, or even divergence in the other direction to maybe avoid the last few continuation trades that may not be good ones. Or you can take them all and you'll live with the losers, the 20% losers, and you'll be able to still make money with the other 80% if you manage your risk and your reward correctly. So that could be it for, let's see if we could do something else. Just wanted to see, that looks like a rising wedge on a daily. So we could possibly, it would make sense because we know a falling wedge, which this could have been. The nice target of a falling wedge, falling wedge or a rising wedge for that matter, is the 618 fib retracement. So it's not far, so they could easily make that. We are starting to see daily bearish RSI divergence, not on the MACD though, and we weren't seeing it on the 4-hour either. So, so we'll see how it finishes this move, but it could easily make it to 618, then give us a rejection and start moving down. So I'm not very interested right now. It's something that we could keep an eye on. On the 1 hour, it's not more interesting, just going to be smaller. So that's pretty much it for Bitcoin Cash, I would say. And guys, if there's things you want me to specifically put an alert on for you or for a specific currency, let me know. We'll put an alert. I can put alerts in TradingView, and when I'm alerted, I normally put it in the chat, and you can check them out.
How about Litecoin to US dollar? Is it similar to Bitcoin?
Yeah, we can do it next. It's in my like all my tabs at the bottom are all loaded, so those are all the ones that I was intending to cover. I can move Litecoin up though and do it before Ethereum. Doesn't really matter to me.
Sweet.
So Litecoin, do you want to do USD and BTC both, or because I have LTC BTC or LTC USD?
LTC USD.
So we'll start with that. I'll still do the BTC. Still good practice. So we'll start, go look at the daily, see if we have PSRs, what the structure is. And just a quick exercise here to show you, but just want to show you the fib from here. I don't even know what it looks like, but yeah, pretty damn close to 786. They stopped right on the PSR. So that's good enough for me. Then, so when I know I'm done my downward correction, then I can erase this You can leave them on if it doesn't bother your chart, if it doesn't clutter it too much, there's no harm. But really the ones that we need are the ones from top to bottom of our reversal falling wedge to the upside and see our potential resistances. This will also, the way I have it set up and the way I've shown you in TradingView to set it up, is that it should also, don't freeze up on me, please. Oh, I guess it doesn't go higher. Okay. Yeah, so above it should give me my my fib extensions. I just for some reason can't scale on it right now. But anyways, even if we go to the double top, we'll have plenty of time to reanalyze this. But the 618 could be the target. Now in this case, I have a 3-month PSR and a clear swing high here. That's going to be an obstacle when we get there. Now that's in $100 from now on Litecoin. Or well, no, not the 3-month PSR, but the 618 is. Now, this is the part where you have a wide open space here. No PSRs and no big fibs until the 50%. So you have here a gap of, after we pass these two little swing highs where it stopped today exactly. And you can see we had a line there. But if it breaks that up again, like, I mean, you have a move of $60, $62 before the 50% fib. And then 77 or so for the 3-month PSR and the 618 fib for 94 or so. So for me, if I'm a trader and I don't want to risk part of my profit, or let's say I want to go get what we call the low-hanging fruit, right? The trades that are easier to go get without too much obstacles or without too much difficulty. You want to target the areas where there's no PSRs and there's no important fibs. Now, of course, we're going to pause it at 236 and we're going to pause at little lines like this. They're going to respect them at least temporarily. And sometimes, yes, they can hit that in turn. That can be for multiple different reasons. It can be news in the market. It can be that there wasn't enough buyers behind the move. Many reasons. But normally, the 236 and the 382, that's not normally where they'll turn. The most often used fibs will be the 50%, which is not actually a fib ratio number. They just put it there because it's a 50% discount and it seems to work in the markets. People like 50% off. Same thing as in life. And then the 618, your golden ratio in the fib sequence. And that's usually the one that we use the most often. And when we reach those levels, what we'll look for is any type of reversal candlestick formation. So whether it's, in this case, could be a bearish engulfing candle, it could be an evening star. Let's see here if I can bring those up. You guys see my browser?
Yes.
So yeah, bearish engulfing is just you're going up, you're going up. So in this case, we would be going up to our fibs. We get one last like big green bullish candle, and then the next one would be a bearish candle that completely engulfs the previous one. We have multiple examples. You can Google examples of this. See another one here. And that's a bearish engulfing. You can get bullish signs. Normally we'll look for those at the bottom of a move. And then you have another pretty powerful one that and guys, Google is your friend. Anything that we talk about, whether it's a term or some trading lingo or a pattern, they're pretty easy to find on Google in the image section, or we have a bunch of resources and PDFs were shared. We'll organize those a little bit better when the website is built, and we also have like a few sites for patterns that we share all the time. And if you're not sure, what?
So the bearish engulfing candle needs to consume both the candlesticks as well as the actual piece itself?
You mean the wicks?
Yes, sorry, thank you.
I don't use it that way. Can it be better or more confirmed that way? Maybe.
Okay.
Normally the thing is the type of candle that I look for a bearish engulfing is not going to have much wicks. It's good. It's usually going to be a big candle with not a lot of wicks. Like here, for example, this thing here, this for me is a bearish engulfing. So I'm not looking for something that has a lot of wicks. Sometimes those will create other pattern for candlestick formations. For example, the evening star, you'll see a doji or a big, like an inverted hammer, preceded by a bullish candle, indecision candle. So that could be a doji, evening star, and then a bearish candle. That's called an evening star formation, and that's a bearish reversal pattern. So you can see one here as an example. Another one here. Bless you.
Oh.
So yeah. So if you're not sure, I mean, Google for that's pretty good. Like I would say trust anything that you find on Google all over the place for any type of pattern, but usually like simple things like that, you can find good information. And if you're not sure if it's good, just bring it on over to the server and Discord with us and check it out, and we'll
a good site to go by is Thomas Bukowski. He has you can get just about any information about any kind of candles or patterns or formations from his website.
So if you want to take down some sites that will be useful for you, I would create a bookmark section for trading, and I would save all those so you don't have to ask us all the time, or that it's easy for you to find. It saves you time. So there's chartpatterns.com, really easily and like really pretty simple. Not as much details maybe as the pattern site for where Rev was talking about with Thomas Volkowski. He's a bit more detailed oriented. But yeah, the patternsite.com. There's candlesticks. Come on. Why isn't it going? Yeah, so look, there's a huge list. So if you want some reading material, yeah, those are all the candlesticks. So for example, if we wanted to see bearish engulfing, is it there? Now, take what he says with a grain of salt, because he did all his analysis on the stock market on longer time frames. So often enough, you'll hear him say, "Oh, like even especially for patterns, you'll hear him say you need 3-4 months of this pattern for it to be valid." Well, it doesn't necessarily apply to what we do, but the guidelines to identify the patterns and the measured moves and things like that, those are really good. So let's see. Yeah, so bearish engulfing. So he tells you the number of candles you need to create that formation, price trend leading up to the pattern, upward, and then he tells you what to look for, gives you a few examples. It's a pretty good site. And in that site too, you'll have just regular chart patterns here. So as we were talking about earlier, come on. Like for example, we were talking about falling wedges or rising wedges earlier. So falling wedge here, you'll identify them. See, here's what I mean. Like here it says 3 weeks is the minimum duration, otherwise it's a pennant. Well, I kind of covered that earlier, that if it's really short term, it's going to be a pennant. I'm not sure that they necessarily need to all be 3 weeks to be considered a falling wedge. But that's also why we try to focus a little bit more on the bigger time frames, 4 hour mostly, and then drop on a 1 hour to identify like smaller trend lines, because that's where the big boys trade, the institutions and the bankers. That's the time frames that have more significance. Code Code says he's not going to let us have our website look like that. Well, I sure hope not. And I've been told too that MT4 looks like an old DOS or Windows platform, and it does, but it's still one of the best at what it does for certain things. So we still have to use it until they create something that does the same thing as well. But yeah, it's been Windows 98. Yeah. So okay. So yeah. So those sites, I would bookmark them. There's this one too, stockcharts.com. They do have a specific section when you get to stockcharts.com. Let's see here. Where is it? Chart School. Anyways, if you Google stockcharts.com chart patterns, or go in Chart School, I think that's where it is. Anyways, I'll send you the exact link. There we go. But you can explore the site. But yeah, simple patterns, not a whole lot like Thomas Bulkowski. They focus on the most important ones: double tops, double bottoms, head and shoulders, falling, rising wedge, rounding bottom, triple top, triple bottom, and bump and run. And bump and run is something that I cover in my analysis myself all the time. I've never covered it with you guys, so maybe we can look at it. But it's basically when you have a bottom slope. So let's say we're going up. So we have a bottom slope like this that's not as steep. And then for some reason, the price starts making a more hyperbolic move or parabolic move and goes a little bit steeper. And so you can draw another trend line, and the angle increases all the time. Now, sometimes you can do that 3-4 times, and then it starts breaking down. And what you can do in these kinds of trades is every time you break one of the lines, you can wait for your break hook and go of the line, and then you enter a position, and you can basically build 3 or 4 as you go down, and these can become incredible trades for you. And it would be the same thing on the downward side. But yeah, those are all, like, if you want to focus on some patterns, these are the main reversal patterns, and then you have the main continuation patterns. So don't necessarily need to go like, yes, this is a great, like Thomas's site is great, but there's a whole lot of information that you don't need to be a good trader. But if you are looking for something and you're not finding it elsewhere, you'll probably find it here. And this one here too, pretty simple site here. So let's say symmetrical triangles. So you see, pretty simple on this one, just a one-page one.
This is Naeem's favorite site right here.
I would imagine. So yeah, those 3 guys, bookmark them. You'll be using them quite a bit. That's something I give away all the time. So let's go back to this. So we had our fib, so now we're here. So of course, if you want to take this in a bullish trade, now considering that we're pretty high on the daily RSI already, maybe due for a little pullback, and then maybe you'd have an opportunity to go higher. If you go check the 4-hour, the RSI has pulled back, but now it's just making a little kind of flag here, as we can see on the price, and maybe we could make it further down to get oversold and then make another leg up. And if we do that, that would create our A, B, C correction. Right now, it's mostly in a B section of the whole thing, creating a bear flag. So at this point right now, I probably wouldn't touch this one personally. 1 hour, it was oversold with the slight bullish divergence. And of course, we've started going up. I think that's pretty much it. I mean, if you want to just play the falling wedge to the target, then pretty clear. I would not target further than the 50% because then you're going to start hitting some obstacles. And why take a chance and risk your 60, 70 bucks in profit on a $167 currency right now for an extra 10 bucks and then another 10, 20 bucks, right? Your big, easy, low-hanging fruit is here. Now, if you want to get there and really tight your stop, just in case it does continue moving up quite drastically and you don't get kicked out, that's fine. There's many ways to do it. That'll be for you to decide or check out, but that's the low-hanging fruit is right here. So I think, does that help for Litecoin? We're good on that one?
Would you
Yeah.
mind saying something about stop loss, how you handle that for this trade?
What's the question?
Oh, I'm sorry. Would you mind
Where
saying
would
something
you-
about a stop loss and what kind of risk to reward it would bring?
Are you referring to where to place your stop loss?
Yeah.
Well, if you position size in, you're going to know where to put it at. But like, for instance, I go to the nearest swing low, and if Laura Lee will mark the nearest swing low, so that would be the nearest swing low. If you were in a short position, you go to your nearest swing high or a little above. So,
Or a fib or a PSR.
yeah.
Yeah. That's what I was
Yeah.
wondering.
So it all depends, and it all depends which time frame you want to use, right? Because I'm gonna get different PSRs here, although they might be close. But you can see I have a 2-month PSR here. So if I'm going to use this swing low, I'm probably going to want to use this 2-month PSR in my favor as protection as well. Now, if I do that though, and I put my stop loss somewhere around here or whatever, then I have to be sure of how far that is, and that's pretty far right now. Which is why often it's better to take it closer to the reversal point than when it's already started to go and chase it. That's what we call chasing, and you're often chasing when you act with FOMO.
Right.
So in this case, though, yeah, if you're going to try to do a long, for example, and try to go to the all the way just before the 50% fib, which we were seeing here, without any obstacles, well, then yeah, you're if you put your stop loss below the 1 year, that's about 22 bucks worth of move. But if you put your target here, you're at about $68, $70. So you have at least a 3-to-1. It's a good, decent setup. If you take these kinds of setups and they work out 50% of the time, you'll make money.
Thank you.
Makes
Like-
sense? Or?
Would 240 be a good place then to instead of right at the fib line, 243 to go a little bit under?
Yep. So you want to be careful. It's even more important in Forex, but it is important too in cryptos or anything that you trade is even numbers. So for example, in Litecoin, it could be $100, 150, like even the 50s, and then 200. But 250 is probably going to be important. And yeah, why go fight? And your targets probably want to always have on even numbers and your stop losses on uneven numbers. So in this case, for example, if I did put my stop loss below here, I'd probably put it at 147 or 143.
Is that Max making the noise there?
I don't know. I think so.
Mac,
I don't see his mic though.
I think it's Jason, but I'm not sure.
Could be.
I'm on tap to speak.
There's no push to talk in here in Zoom. There is in Discord, but it doesn't work in Zoom. You can use Alt A and it mutes it unmutes your mic, or you can just click it in the meeting settings. It's not drastically bad. It's just we hear a little bit. Yeah. So yeah, that's pretty much it for this one, I think. Good to move on, guys. We can check the LTC BTC anyways. It just seems to be doing this is what we call an Adam and Eve bottom, but then it does it almost again after that. I might as well show you that. We're going to learn a lot of things tonight. So guess who will have this? Adam and Eve. Oops, that's Adam and Adam. I don't know what that looks like, but yeah.
At least it ain't Adam and Steve.
So yeah, steeper first bottom, like a more jagged bottom, and then a pullback almost right to the same place, and then the Eve bottom, more rounding. So we see a perfect example here, right? Jagged bottom, make a leg up, and then we pull right back, and we have a rounding bottom. And we're kind of doing it again here. So it's kind of having a hard time. Here is what I call trading in a box. So if I was to put like a parallel channel here, you'll see that I could do it slightly different ways, but if I went to TradingView, there's another way you can do this. So you can do it this way with the rectangle. As you can see, we tried to break through the top of the box, and we got rejected so far. Now, as we were saying, this is probably A, B, and maybe C. Normally, if they're trading in a box like that, they normally go from the top of the box to the bottom of the box, and the opposite way around after that. Now, eventually it does break, either up or down, so normally this could also be considered a Darvis box, and usually they break in the same direction as what they came in. So we'll see. What you can do to play, if you want to play a box like that and trade it sideways, up and down, what you can do is you place some fibs near one of the highs. You could even have done it here, like on the opposite direction. Doesn't really matter. And so as long as then you see, I'll remove the box because it's hard to see. And I'll remove my old fibs. I'll remove this, which was the downtrend. Okay. So as you can see here, even though I did this, and this is to find my pullback areas here, you can see it's still respecting it, and the structure and the symmetry still works on these levels here. You see we touch this, get exact touches all over the place. So that's how you see if your fibs are drawn correctly and at the right place. And then you start moving towards the pullback and the sideways move in the box. And as you can see, goes right to the 50, moves back up to the 23.6. Then since we've tested the 50 already, now we can break through it, and we go to the 618, go back up a little bit, test it again, move back up a little bit, go get some more sellers, and then we make it all the way to the bottom, and then we start rounding up. Where do we go? First candle right to the previous fib, second candle right to the next fib, and then we skip one of them and we go right to the next one. So those will happen all the time. And if you have it drawn correctly, you can basically play all the fibs up, play all the fibs down, or go from top to bottom of the box, bottom to top. And there's a lot of money to be made that way. And these are quite big moves anyways, right? Because like just here, for example, you had a rejection tweezer bottom with the bullish engulfing candle. It went back down a little bit, like 2% after that. But if you would have got in here and waited for the first big bearish engulfing candle, which happened here, and then another one here, that's still a 9% trade in 7 days. But 7 days, I mean, it's but I mean, if you have leverage, those can be very nice trades. And if you do that every 7 days, your account will grow quite nicely. What's nice about the box trading is that if you catch the move at the start and you're not chasing it after it's already going, your stop loss can be just below the box and your target's at the top of the box or close to it. So those are great reward to risk setups. But you have to be able to identify those, draw your fibs, and still manage everything. But those are certainly ways to make money in a sideways markets. So that's that for now. And here, let's check. So not too much showing us. We're getting convergence on the RSI. So we were overbought, but they pulled back, pulling back a little bit, which we see here, but not making higher highs. Same thing on the MACD, converging to the downside, which makes sense. So converging, guys, is the opposite of divergence or diverging. It just means that the indicator and the price action are doing the same thing, so converging together, and that's usually how it should work. So that's why when we find divergences, we can find potential reversals. That's how it works.
When we have convergence, you basically default to going with the trend. Is that right?
Yep,
Like
pretty
whatever
much.
the current trend is.
Yep. Yeah, so in this case, for example, it's showing you that, okay, we've pulled back, which the MACD has done as well, but now we're moving back up, and it's not showing you much momentum, right? And so a little pullback in the RSI as well, so that's normal. They're all relying on each other and following each other, and then we'll probably make another move down. Another thing that you can do within your box trading, if you want to add to positions or be a little bit more conservative than taking your entries right at the bottom and the top of the box, is you can do some slopes. So slopes, but normally I'll do slopes on a 1 hour. So slopes, I'll go back on the 4 hour. They're cleaner. So here you have a slope. I'm just going to do them quickly here, but this is pretty steep. There's one there. Here you go. And here we have a bump and run, guys. So we saw that earlier. This is your first lead-in line. Then you have your another anchor point, and you could. So here, because we have this low now, we could do this. But before you had this, you could have done this. That was also a possibility. So you could have caught this break, but no real sense, because if you wait for a pullback, which it almost always gives you, then you can just take your entry and you won't be scared to ruin all your profits because the trade is turning against you if you just wait for the pullback to enter. And an easy way to see if it's just a pullback and you have an opportunity to enter is just put your fibs on the whole leg. And as you can see, We're making our way up to the 50%. If you see some sort of reversal formation there, why not take a short? And then your second entry could be if you see a break hook and go of this second line, and then you try to make it all the way back to the bottom, right? And if we want to go to the upside or outside the box, then we need to wait until this is decided. So we'll need to wait for a break and hook retest of this top of the box, or if we make it down, same thing. We'd have to analyze or wait to see what it does when it reaches the bottom again. Clear as mud.
Yeah, that makes sense.
Okay.
Would this apply to any time frame, like very large time frames too?
Yep. Daily, I would say. It's just which time frame do you have in mind?
All of them. but yeah, like say over weeks, yeah, like daily candles, or I was just trying to figure out what the maximum would be till some of these methods start to lose their weight.
No, the sideways boxes will happen. Markets move sideways quite often. I think markets are only trending 30% of the time in currency markets, not in stocks. In stocks, it's a little bit different, but in currencies, but when they trend, they're big moves. But in this case here, if you just calculate on MT4, like from the top of the box here to the first time we reach the bottom, that's 52 candles of 4 hours. So 52 candles of 4 hours, there's 6 per day. So 52 divided by 6, that's 8.6. So a little bit more than 8 days, as we calculated with our ruler and TradingView earlier. So 8 days for that short. If you catch at the bottom here, another 7 or 8 days to go almost to the top of the box. A little bit quicker here, and then a longer, because it took a while to get going, longer trade here. But there's still a week or thereabouts. And the last few big trades that we've had on Bitcoin, where we went to get like 100% and 70%, they were mostly 2-week trades. That's when the last best trades were.
And what was the big difference between currencies and stocks in this for box trades?
Well, it's just that the stock market trends a little bit more, right? You're going to have longer and bigger bull markets, whereas currencies, they fluctuate against each other. So in Forex, yes, you can have trends, but like right now, if you checked Forex, there's maybe a few currency pairs that are trending. The rest is all moving sideways. But anyways, you analyze what's on the chart. It doesn't really matter if you know that they're normally trending or not. That's something you'll get to know as you work in the markets.
Are you recording this session?
Yes.
Sweet.
Yeah. When I remember, I do it. At first, I wasn't in the habit of doing it, so we were always forgetting. So I think that's it for Litecoin BTC. And probably I would say I think we make another move down for multiple reasons, as we talked about. So we'll check that out. I would probably wait then if you're not in a short and you're interested in it. I would wait for at least a touch on the 50, if not the 618. What would be that top here? Right, just a little bit above. And if we put our fibs like we did on TradingView, just going to remove. Yeah, so we can see that the 886 of the total box and the 50 line up almost on top of each other. So that could be a nice area if you reach there, you could drop down and you see we have a 2-month PSR on a 1 hour. So this could be a nice area that if you hit there and you start to see, you're waiting then for a reversal sign from your candlesticks. Then if that happens, or for example, if we get overbought on the 1 hour RSI, things like that, you can maybe start to look for a short. And then as you can see, you have quite a bit of room then to the short-term double bottom, and then all the way down to the bottom of the box, or even part of it, right? If you want to stop here, there's a PSR, but all sorts of ways to do it, all sorts of ways to add to your position and press your winners, all sorts of ways to move your stop losses, but that's pretty much the setup here in this case. Ethereum USD. Now, of course, as always, a lot of them are going to look similar, right? So another bump and run in this case. I'll try to zoom out just to see. So here, maybe we could draw a trend. Problem is, I don't like anchoring in the middle of a leg. Now I could anchor here. It's pretty close. So what am I going to do to see if this is right? I'm going to go to TradingView where we have our fib trend tool. I'm going to go in Ethereum. You can do Coinbase, doesn't really matter. Come on. What's going on? If I do this. Is my heart line proven? I think so. Respecting my zone lines. Yeah, I like that. So this is the high on March 31st. Is this March 31st? Yes, sir. So we're good. It looks a bit different. It's a different broker, different price feed. That's all right. Now, do we have a wave count? This could be 1. I don't like this as a 2. This is more of a pole trade. You want a perfect example of a big pole trade. See, measured move into the pole, $127. Measure out the pole, even more than $127. So, yeah, right now, if this is a 1, 2, A, B, C for your 3, 4, and we could be at the start of a 5. I'm not liking how it's bouncing. It gave us a massive, massive tweezer bottom here, though. Massive rejection wicks. But we were not yet oversold.
It's the SEC FUD, isn't it?
Well, this would be pushing it back up, so it wouldn't be fear, but it could be the relief of the fear.
Yeah.
Yeah. So, yeah. In this case, though, I don't like how this, to me, like if I remove this here, well, first of all, we did get, like on this leg here, we did get a 618 pullback, and it coincided with the bottom of the channel or the trend, so you see how it got rejected quite easily. But if I remove those, just to make it clear a little bit, just want to see if this is a potential just pullback to break the trend. You always want to look for all possibilities, so you're not lost as to what's happening. But here you see 1 year PSR, close to the 618, we could make it there. And then it could be an attempt to break this a second time. Because, see, we're not getting any momentum on the MACD whatsoever. We still haven't made it to the oversold level, even today on those wicks. On the RSI, in the 1 hour, we had been. So here's an example of what we call a close in reverse. Although they're more significant on a 4 hour and a daily, they still happen on a 1 hour. Basically, you see a big impulse move in the bearish direction or downwards, and then although they don't get to a full bullish engulfing candle, you can still see there's a clear reversal. And often you'll see that, and then they'll try to push it up, not enough buyers to follow up the move. So they'll come down and they'll find some new buyers at a more attractive price. So, and they retest the PSR in the bottom of the channel again. And then you get those rejection wicks, another close in reverse, and up we go. And here you do get your bullish engulfing candle as a continuation. So a little pullback, and then we go, right? And what did they do here? They went right to the 50% fib retracement. This was also a swing low, which was used as support on the way down. Support on the way down, when we start going up again, then becomes resistance. So previous support becomes resistance, and previous resistance becomes support in the future. That's usually how it works. So yeah, we could easily make it to the 618 or even maybe the 3-month PSR, and then we'll have to see what kind of candlesticks it gives us, if it gets overbought, all that good stuff. But right now, it's still pretty much wait and see. You can draw some more slopes on here, which we would have had broken, and you could do this as well. Right now, it's not something I'm really, really interested in as a setup. Needs to be a lot clearer for me. So Ethereum BTC. So here, rounding top, we have another 618 probably here, or 786, close to it. No MACD momentum on the push back up. Again, we were overbought with bearish divergence, and we started making its way down, not yet oversold, and we're pulling back, but we could be seeing another A, B, C, and the C could make it at least to the 1.270 fib extension, if not slightly lower. But this could still be a nice move. If you take it from the 786, if it does make it there, even here, that's quite significant. So let's see this one. Same.
Do you ever trade Ethereum for BTC, or do you just go for US dollars?
Well, in here I can do both. Whatever setup looks better.
Yeah, okay.
Or both.
So it's worth checking them both out for trade setups.
Since we have the options on JAFX, I would. That's what I've been doing. Yeah, looks similar channel, right? If we zoom out, trying to see, do we want to fib this to see where we're at in the upward move? So see, we started coming back up. Where did we stop first? Right on the 236. Came back a little bit, pushed up, and now we're hitting the channel a few times. And a few touches on the bottom channel, and then we go right to the 382. Try to zoom in, remove those. Then we make it to the 382 right here, top of the channel, bottom of the channel, and right now we're in no man's land, and it's either going to have to decide if it breaks down or if we move sideways and then give it ourselves a little bit of room in the channel to go reach the 50. But yeah, that's what is Ethereum right now. So Neo, do you want to start with USD or BTC? Doesn't matter. BTC.
Can you do USD on Binance?
I'm not sure.
I'm going to check real fast. Yeah, Binance lets you do both.
Yeah, I think so now. Yeah. So yeah, Neo BTC 4-hour. This is what I have so far. There was a lot of bearish momentum. You see the MACD is quite strong to the downside. No divergence, no bullish divergence yet. We made it close to oversold, but not yet there. As you can see, though, if you fib this leg up, we did get a perfect touch in respect of our 786. Now, it would be possible that we do hit this trend line, this slope, and we get rejected and try to make it a double bottom. I also, for some reason, don't have my 886 on here. Somebody's making noise in their mic there. Yeah. See, that could make a lot of sense. And then the other thing that we could fib is the start here. So as you can see, those were a good support zone. And we have another one here with the 886 and the 618. So either you wait for the break of this falling wedge, a break hook and go of our line break, and or we move down, gets even more attractive. But either way, this is mostly a long. I would short this into a squeezing wedge and approaching some important fib levels. You could possibly also do, yeah, I don't know. Let's see what angle that gives us on the top. It's pretty damn close. If that's the case, then we might have broken, and now we're doing the hook to the bottom of our trend. Let's go see if that gets shown with the hard line and the zone lines in the trend tool. So Neo BTC. Oh, come on. Pretty darn good. Now I'm gonna try just to see what it would do. I think I like the first one better. Yeah, hard line is super clean, and then we get our touches on the zone 1 to zone 2. What do you think? You like this one better, or does this one look cleaner?
That one looks cleaner.
That one?
I think so.
You see this?
Oh, okay. My bad.
Well, I mean, I'm all for opinion.
No. I didn't. I was looking at the bottom of the channel. I didn't see that up there.
Oh yeah. Well, what I'm trying to figure out if this is a break or if it isn't a break, right? So that I'm just trying to show them that sometimes that's how you figure it out, to see if you're really broken out or if you're not, or if you want to be conservative, you draw both and you wait for the break of that next one, but you might be late on the move and chasing instead of anticipating. Yeah, I think that's the correct one. So that would mean that if we go back to here, we have it right. It's drawn correctly. You can even see it's tricky here to try to figure out your hard line. I'm pretty good at seeing them. That's pretty close. Yeah, so anyways. So regardless, we go back in and we move back within the trend, and this was a head fake, or we make it, we get squeezed further down. For me, it's still a wait trade. Now, if we wanted to put an alert, for example, drop on the 1 hour. Just a sec. Ooh, I don't like. It gets confusing. Do this for now. Okay, so alert. Don't want to do it in the 4 hour though. That's going to take forever. See, for those that use alerts, just a trick is that if you do it like this, so it's the same trend line, but if you do it here and if you do it here and you say, I want an alert crossing when it crosses up, and you say once per bar close. So anytime it goes through it, you'll get notified, and you can put the date as ever like furthest down the road. Well, if you put it on a 4 hour and it says once per bar close, it'll only give you the alert after the 4 hour candle close. So if it crossed in the first half hour of the candle and it's 3 hours later and it closes, then it'll give you the alert. Sometimes that's a bit late. So what I normally try to do is I try to go down to 1 hour at least. And on shorter strategies, like on strategies that I like to set up on the 1 hour, I'll even drop it to a 10-minute to set up my alert. And it doesn't mean that because I get the alert on a 10-minute that I'm going to actually take the trade, but it just alerts me to go look at it. But in this case, on the bigger patterns like this, I'll drop here and I'll do a 1 hour crossing it up once per bar close. There we go. Now, as far, I was going to say, I thought of something and then I forgot it. So it's gone for now. Yes. Okay. So we're all good with that one. Neo USD, let's see if it looks different. See, that one shows already broken. So we'll draw the other stuff as well if we can. And see, guys, these currency pairs with the USD, they'll be impacted by the dollar index. The dollar index is a basket of currencies that's weighed together in an average and weighed against the US dollar. And if the US dollar is getting stronger and these cryptocurrencies are priced in US dollars, well, technically, if the price of the cryptos don't change and the US dollar is increasing in value all across the other markets, then it should push the cryptos down. If the US dollar is dropping and losing value across every asset class and the cryptos are keeping the same value in the eyes of the markets, then that should push the crypto pairs up. A little bit of news coming in, I guess, for the Forex market. My headset is beeping, beeping, beeping. New Zealand news right now.
Yeah, it's virtually unchanged.
Yeah,
Also, retail sales were virtually unchanged as well.
They were at zero, though, and forecast was 0.2%, so they were negative, and the Aussie reacted, but nothing too crazy.
No,
I don't think, anyways. Yeah, it reacted and then pulled back already, so nothing too crazy. Okay, so yeah, this one we're already broken. The wedge here, I don't know. It's very small too. To me, it's not the clearest setup. So I'll just move on. We checked it with BTC anyways. So here we have a potential. Okay, so I'm not gonna do it the right way. So you always check your bigger structure first. Check for structure, trend, bigger PSRs, for example. I don't know here if I do this. Yeah, that's going to be it. And guys, the only way you can practice these and become good at seeing them and doing them quickly is just to go do hundreds and hundreds of them. And if there's not a lot of history on cryptos and you don't have enough, go do on Forex, go do on stocks. It's all the same thing. And in MT4, if you want to scroll back, you take off your play button. You can use your arrows on your keyboard and just draw some stuff. Draw some slopes, right? Adjust them, get used to it. You'll be, if you do that once in a while, like on the weekend, you do a few hours of that throughout the week. And that's how you become very quick at drawing them. Like if I'm by myself, I can go through these charts in about 15 minutes and draw them all. But yeah, hundreds and hundreds and thousands. Here we have a possible slope. So here, similar thing, right? They all seem to be pretty much moving in concert lately, except for a few exceptions. Fib of our last leg up. 618 again. Would you look at that? So funny. 1, 2, A, B, C, 3, 4, potential 5. So I think that it's pretty much the same thing repeating itself here too. OMG, Omis go, or Omis. Do they say Omis or Omis? Omis? Not sure. I think I lost my chat here. I don't know how the chat's going to help me if you write it down. It's not going to help me say it. Looks like slightly similar. This is a lot less steep than the others, but still. It's a bit crooked. Yeah. Looks half straight. So let's do it with the real tool. Is that BTC or USD? Yeah, that's not gonna work. And I'm just doing Bitfinex, guys, because that's the price feed and liquidity provider that JAFX uses. You can chart it anywhere. It's going to look similar. So here, guys, like if I zoom in and I don't zoom out, I think we have a trend, right? Or at least a parallel channel like we had drawn, like this. So something like that. Heart line, heart line, heart line, heart line, heart line, heart line. Zone 3, zone 3, zone 3, zone 3. Zone 1, zone 1, zone 1. It's clean, okay? But if you zoom out a little bit, are we also potentially in a bigger box, right? So hate this background. What should I make it? Blue?
Black like your soul.
Could do it just like this. I mean, yeah, so you see once again, up and down, up and down. These are big moves that you can do without having a trend. This is a sideways box. So when they tell you markets are chopping, they're hard to make money. Look, if you just do top to bottom, do the fibs, do your slope breaks, like here again, slope break, slope break. Right now, we're basically, well, we could have one here, but anyways, I'm doing them quickly. You get the point. Fibs. Whoa. There we go. Yeah, pretty easy. Fib to fib to fib to fib to fib to fib, all over the place. So now, yeah, we're potentially, instead of in a trend, maybe we know that now we're in a sideways box and we need to make it back to the box. Doesn't mean that it can't be a trend and make a wave 5 and break out of the box, but right now that's what we're seeing. And is there more potential to the downside or more potential to the upside before we hit resistance or support? Well, there's less room here than there is here. Your wide open space, your low hanging fruit is here if it gives us what we want. Now, we're already close to oversold, or we were oversold. So iffy there too. But if the setups aren't clear, guys, don't trade them. You don't have to trade. You don't always have to press the button. You can use your Xbox or your computer to go press the buttons.
But there's only 1,000 pairs to choose from.
Yeah, on top of that, I'm sure you can find a good setup somewhere. But even then, sometimes there isn't. You got to be patient sometimes. You make money waiting, because any losing trade that you don't make is the same thing as making a winning trade in the end. A lot of traders have a hard time understanding that, but that's the reality.
You mean because you have to win a trade to make up for a losing trade?
Yeah. So if you don't make the losing trades, the same thing as if you would have made a winning one. But people don't see it like that because they're not increasing their portfolio when they don't make the losing trade. But if you start eliminating the bad trades because they were just iffy setups, then you have to make a lot less winning trades to be profitable, or you'll get to keep a lot more of your winning trade profits because they won't get eaten up by the mediocre setups that you took. Okay, so this, I mean, not much to do. XMR was a really nice wedge. So this is a setup, guys. This is a beauty setup. So as you can see, we came all the way back down to the 86, almost made this. This PSR, bullish MACD divergence, oversold on the 4-hour. Some divergence because, I mean, you're making quite lower lows and not making any headway lower on your RSI or even your MACD. Let's check the daily just for quite steep. And then the 1 hour. See, the thing is, that's what happens often with these big falling wedges is by the time they find energy and enough strength to break out, they're already oversold by the time they reach the 236. So this is a 786, but basically that's from our old fibs that were showing us the potential supports on the way down of this previous move. So what's going to happen is if we remove them and we then fib our whole wedge, see here, we just hit the previous little PSR here that's being formed from this swing high and these touches here. So it's normal. And if you have those on your charts and your chart is done well, then I mean, you don't panic when you're in a long breaking out of this wedge and you see, oh my God, it's stopping there and it's reversing. No, it's just doing what it's supposed to do. And each line is going to show you this type of movement. Now, sometimes they go through them and go to the next one, and yes, but at least you have those on your chart so that you're not always confused or doubting what's happening. This is called what we call a roadmap, right? So it gives you an indication. It's a little bit like building a house. You're not going to go with a blank sheet of paper and start building a house. You're going to have some lines and some measurements and some squares and some things like that you get to the construction site and you know where you're headed and you're not surprised by anything. You're not just improvising. So here, yeah, we could create a sideways pole after an impulse move up, and maybe tomorrow make our way here. That would make a lot of sense. And the pole could be also letting the RSI breathe a little bit. But that's I mean, if you want a nice setup to the upside, I mean, this is a nice setup. Now, as far as targets, like right now, if you would have taken the kind of small double bottom formation at the bottom of the wedge here, your stop loss would have been really tight. So not a lot of risk and a lot of upside potential. But right now, you'll have to see if it makes a sideways pole or a bull flag. Then you want to wait for the break of that. Or if you're aggressive, you enter from the bottom of the flag. And then you play it upwards. Now, what's the target of our falling wedge? Okay, so Cheeky. So Cheeky says he got stopped out of this one. So yes, we're gonna just have a little laugh at you. No, it's normal. That'll happen quite often. But so why would you have gotten stopped out of this? Like when you look.
Well, I put my stop loss a little below the 1 month PSR.
Yeah. So that's a common mistake with new traders is they'll put their stop losses too tight. Now, if you expect the move like this and then the consolidation, the market knows and it sees all your stop losses. And if everybody puts all their stop losses, like all the retail money, sometimes we call that the dumb money. And it's not, I'm not calling you dumb, Cheeky. We've all been there. But that's what the big boys will call these types of trades or stop losses. And they'll go and get them. That's their job. Their job is to go fulfill orders where there's the most orders. So if everybody in the retail trading world is putting their stop loss right at the line or just below it, they'll go get it. That's their job. They're market makers. Now, first of all, I don't know where you entered. So did you get stopped out for a profit or a loss?
Very slight loss.
Okay. So guys, when we enter breakouts like this, either you enter it at the bottom if you can see some sort of bullish candlestick formation, which we didn't get too much in this case, maybe on the 4 hour. Yeah, inverted hammer there. So that could have been an indication. I can't zoom. Inverted hammer. Anyways, but if you miss the break, and so there's two ways to do it. Drop down 1 hour and either wait for the break, which we got, and a hook to your breakout line, and then a go candle, right? That's our break, hook, and go technique. And that's to prevent false breakouts, head fakes, or the fact that you get in at the end of the move here, and because you get in here when it's already had a good impulse move, you have to put your stop loss here, not for it to be too far and to risk too much. And then the currency normally does a pull or a consolidation pattern and then kicks you out just before, because right now I could just be doing this. Could simply be doing this, consolidating, and then tomorrow or throughout the night, we do our measured move. So measured move from here.
So it's a miniature pull trade rather than a traditional break, hook, and go?
Well, it could become that, right? So that's what I mean. You have two options. You either wait for the impulse move to be done and show you that it is a pull trade, and then you play the pull trade, or you wait and you're going to get a hook to the line. And in the case of a steep falling wedge, it's very likely that because of the geometry of the angle of the line, it's going to probably even come back lower than where it broke out. And that gives you an even better entry price than if you took it right at the close of the candle that broke, right? So it gives you an even better reward to risk ratio. Or you find some way to find out that you could have entered here even before the break, and you scale in. You just take a scout position. We have a video about scout from Pro Eye Traders in our educational section, I think. I also covered. No, I didn't cover scouts in our first Zoom session. But anyways, there's ways to enter a smaller portion of your position here, then do it again, either on the pull or the break hook and go, and then you press your winner even as you're going. So you could cross the 1 month PSR, add another position there, and even for a few fibs after that, because your target's going to be the 618. Now here, it just so happens that if we look on the 1 hour, the 618 lines up almost perfectly with a 3 month PSR, but the PSRs from the 1 hour are not that important. So we're going to go look at the 4 hour, and well, you look at that, right? 618 with a 1 year PSR right on the dot. So
damn.
Where do you think our target's going to be, guys? Now, if you want a trade setup, this is the one. Now, how many trade, like we looked at 10 charts maybe so far. This is the first very nice one.
So you'd wait for either confirmation of the poll or a retrace for the hook and go.
Yeah, so the poll right now looks to me like what it's doing. But like, for example, for Cheeky that got in somewhere in this candle, could have waited for the pull or the pullback, right? Either way will help you reduce your loser and stay in your trade too, right? Because there's no significant pullback here, and there's no reason for like Cheeky set up an entry or like could end up being a great trade. But what often happens is that you get in like this, you get kicked out, and then you're like, okay, the trade is over, and you don't get back in, right?
I meant the other 1 month PSR at the bottom of the wedge.
Oh, so here?
Yeah.
Oh, well, so you got in. Where'd you get in though?
Not much above that, just right there. I think I had my fib wrong, and it looked like I had it set as my 886.
Okay.
I had a really tight stop loss, and well.
Yeah.
That happens to me a lot too when I set my stop losses too tight. It's just because something was drawn wrong.
Yeah, but even then, guys, you're way better off to start scaling in with smaller positions. Like, let's say you want to put $100 in a trade. Put $30 in the first position in a more aggressive manner, and put 3 times your stop loss. Like the same stop loss you would have put if you had taken your full trade. Put 3 times that or double it. Like take the structural stop loss target level that you think is fine, and don't put it too tight on the line. The market knows where the lines are. If you can figure out where a swing low is and put your stop loss just below that, don't you think that the market makers can know that's what most people are going to do? Yes, they're going to go get those orders. So you want to give it a bit of room, and if you scale in with a scout and you just start with a small portion of your whole intended trade, then you can double your stop loss and still be taking the same amount of risk or even less, and you won't get kicked out. And then as the trade starts playing out in your favor, then move that first stop, like even build into the position, That's called pressing your winners. So averaging in, but not dollar cost averaging in the sense that you're reducing your cost basis in a losing trade. You're adding to a winning trade. That's usually the way to do it, because if a trade is a loser, there's a good chance that for some reason you didn't see something, it's not a good setup, or it's just not going your way, and you might as well just cut it short. But a winner can go in your favor for quite a while. So if you just cut it short all the time because you get kicked out, then you're never going to get those big runners and recover enough to cover all the potential losses that you have. But yeah, you could scale in, and then as you add, then just reduce, like you bring in the stop of the first position to the same place as where you put the stop loss for the second position you add. But in this case, yeah, we would just wait for the poll. Some people will trade polls, and they'll start, like, if they're not already in this trade that already broke out, some people will add on the bottom of the poll. If they're sure it's a poll, which it seems that way right now, then they might add a position right now or when it hit the bottom of the poll. And then what they'll do is they'll add another position if they do get a breakout to the upside and a hook and a go. Or some people will add a position right on the break with a pending order, and then they might add again if they get a hook and a go, and so on and so forth. There's multiple ways to do it. But in this case, it looks like a poll trade. So next target would be around here, the area of the 236 fib and the 3-month PSR. But if we go on the 4-hour, this is the correct area as well on the 4-hour. But then after that, this is your wide open space. This is your low hanging fruit. Now by then we'll have to reassess, see if we have divergence, overbought territory, things like that. But this definitely looks good.
I love Monero. There's a variety of things that you can buy with it.
Yeah. So does anyone still not know how to put an order in MT4 and JAFX? I can show you with this one.
I'm not set up yet, but I'd like to see it.
Okay. I just have I think I have $100 testing in this account. So let's see. And there's 13 minutes left, or 16 minutes left before the hourly candle closes. If it gives me a bullish engulfing like it's doing right now, I could take my market order, just buy into the trade. Otherwise, what I'm going to want to do is I'm going to want to break this. So let's say I'm going to go to bed soon. So in this case, if I do want to take the trade, it is a bit riskier because you can't wait for your break hook and go and whatnot, but I'm going to put a pending order. And because I have a 1-month PSR just above that, I'm going to put it slightly above that. So you right click anywhere in your trading terminal here, and you click new order. There's also a button here, new order, and then you can also do tools new order. So, or right click here, go in trading, and new order, all sorts of ways. So that's your volume. I'm just going to do a 0.01 to show you. Pending order. So in this case, the price we're going to want to get in is higher than the current price. So we're going to have to use a buy stop. So anytime the price is further in the direction that you're heading in, so in this case, we're heading higher, and the price that I want to enter is further in that direction compared to where I'm at in the price, I need to use a stop order. So if we were going down, it would be the opposite. So if I wanted to short here, the bottom of the pole, I would have to put a sell stop because the entry on the breakout of the pole is further in the direction that I'm looking to go than the current price. If it's the opposite, then it's a buy or sell limit. So for example, let's say I wanted to let it go all the way to this resistance area, and then I'd be looking to take a short as soon as it reaches there. I would then do a sell limit. And same thing if I wanted to let it drop here and automatically buy on the support for it to go back up, I'd use a buy limit. You'll get used to those, and that's why I normally say, like, try to put some different trades on a demo account, and you'll get used to those very quickly. But this one's going to be a buy stop. My line here is at, let's say, 0.0250, so I'll put 0.52. My stop loss can be below my pole, which 0.246, so I'm going to put it below that, 0.0237, and that's going to be way low. These are big moves for this year. Guys, where's my target?
You can't do that on Shipmex.
Oh, I know. That's why we call it Shitmex.
Where's your leverage?
What do you mean?
How do you adjust leverage?
You don't. That's what we've been telling you all along. Forex brokers and MT4 ways. Did you see this? Like, simple. Stop loss, take profit. You don't fuck around with your leverage. It's already set up in your account, and basically, like, I'll take a trade just to show you. But let's say I zoom in.
You only change your leverage one time when you set up your account. I mean, you can play with it throughout, but you have to do it through your dashboard on JavaFX. So I mean, it's not
okay. It's a global
like Shipmex where you go up there and say, "Oh, I'm gonna gamble this time."
Yeah, you're like, see, what I did is I took a size of 0.01. In a second here, when I do a market order and I do 0.01, you'll see how much margin requirement. You see how right now my balance is at 101, equity 101, and free margin 101. Free margin is what you still have as buying power to take trades. Now, with the leverage, that's going to be different. That could be different than your balance. So let's say I do click on it in a market order. See, it's going to buy 0.01. With the spread, I start down by $1 or so. So that's another thing. If you do trade with this, the spreads will eat you up if you only aim for small trades. So only use JavaFX with cryptos for swing trades. They need to be quite big. And this is only at 0.01. So as you can see right now, I'm using $2.34 of my margin. Now my margin is still set at 500 to 1, or 1 to 500, however you want to see it. Now you can reduce it, and then it's gonna. If I reduced my my leverage, it would say that my margin requirement or my margin used would be higher. But I other than that, I don't have. The only thing I control to control how much leverage I'm actually using in size is the size of my trade. And if I loaded a Forex pair, like let's say I load Euro Yen, like if I would take 0.01, that's a micro lot, that's $1,000 worth of nominal currency or nominal value of currency. So if you have 500 to 1 leverage, then you divide that $1,000 is going to be $2 of margin requirement. Now, if you trade a full standard lot, so instead of 0.01, if I would be trading 1.00, that's $100,000 worth of nominal currency. And if I have 500 to 1 leverage, I divide that by 500, and it means that I'm going to require about $200 in my account at least to take this trade. But that's how much I'm going to control in nominal value of currency if I do that trade. And if I do what we call minis, which is 0.10, that's controlling $10,000 of nominal currency. And then I would go 10,000 divided by 500. That's $20 in margin requirement or thereabouts. It can vary slightly from pair to pair, but it's definitely a little bit harder to figure out with the cryptos. So start small, try to figure it out. Lower your leverage. We would suggest lowering your leverage so that you don't somehow screw it up and take a huge trade. Because if you take a huge trade, even just getting in and getting out with the spread
will cost you money.
Yeah,
a lot.
Like right now, if you trade a full Bitcoin, the spread's going to cost you $200 in and out. So if you're in and out and you just get in and out right away because you made a mistake and you don't have the required margin, or you take 100% of risk and you have almost no margin left and it auto liquidates you, you're going to lose that trade, liquidate your account just because the spread was too big or you took too big a trade. So start small, check it out, learn it, see what makes sense for you. But that's how it's done. And then as you can see, so I did XMR, so let's go back to it, XMR BTC. So you see here, that's my buy line. And I bought when it was here, but because of the spread, that's actually where it put me in. My stop loss is way down here. That's quite loose. So as you can see, I could put it tighter, but if I go see here, if I drag my cursor above it, I'm risking $8 on a 0.01, and if I make it to my target, which would be here, my potential reward is $35. 35.81. So 35.81 divided by 8.90, that's 4. That's a 4 reward to risk ratio. Is that a good trade? Yes, sir. Or yes, ma'am.
Take it all day long.
Especially with everything else that we looked at, right? Reversal, falling wedge, clean one. Like I didn't form fit this whatsoever. There's nothing leaving the pattern, no head face, nothing. We had our bullish divergences. The bigger time frames are not yet anywhere clear, close to overbought. The MACD still hasn't made it to the 0 line and above. A lot, like we have this little resistance area. So Daft Ruffian, you were asking about that earlier. That could be a spot that you watch for to make sure there's no clear reversal signs. But normally if you trust the structure and the setups and your fibs and all that, you should know that we should easily pass that. So my target is going to be, now I need to adjust it a little bit. And once again, that's the same thing as your stop losses, guys. Don't put your take profit right on the freaking line. What if it doesn't make it there by $1 and then it turns
You'll
around?
be pissed off,
right? You miss out on all that profit because you weren't there or whatever. It's fine if you're there, but then if you want to say I'm going to be there for the trade, you're going to force yourself to always be in front of the charts, which is not good. So if you do it this way, you give it a little bit of room. It's still a very nice trade. I still go get 32 to risk 8 or 9. It's still good. Still above a 3-to-1. And that's not counting if I get to press my winners, because, for example, right now I already have one trade. And if I take a second one, that one's going to make a little bit less because it's entering from a higher point, but it's still going to make quite a bit of the move. If I do break this area that we talked about, which could be potential resistance, the 23.6 and the 3-month PSR, well, if I break and I get a hook and go or another pole or a bull flag, whatever continuation pattern, then I can enter a third trade. And then that's probably going to be it for me, because I don't want to push my luck and take trades where the market has a higher likelihood of reversing on me or having a hard time making strong moves. So usually that's what I'll do. If I would have seen the bottom and been on top of my things, I could have entered a first position there, second in the poll, third on the break of the poll, and so on and so forth, and maybe here a fourth or a fifth. And then every time you cross an important level, you can move your stop. So now you don't move your stop right as they cross the level, because they can come retest it. And if it wicks through the level to retest it, you're going to get stopped out. So normally the way I do it, so for example, if we, why doesn't it move?
I hate that.
Anyways, so if we make it to the 236 and the 3-month PSR, I want to see a break of this. I want to see a retest, so a hook, and then I want to see it go, and I want them to make it to the other fib or PSR, whatever next level there is, and then I want that to be tested. Once that's tested, I know I can move here. So my stop loss can move somewhere around here. And so if my first stop loss was here, I moved them all. If by then I'm in 2-3 trades, all my 2-3 trades, all the stop losses move here.
And it's going to go to a break even.
More than that in this case.
Yeah, well, yeah. He'll break even plus at that point.
Yeah. And so after that, I can't lose on all these trades. And then if I do take a trade above this, that one, the stop loss could be here, or it could be a little bit lower. It could be all the same. And then I move and I do the same thing. And as I cross the 50 and I'm near my target, then if the 50 gets tested before we make it to my target, guess what? I'm going to move my stop loss below here. And you can continue doing that. And what you can do is if you end up with 4 or 5 different positions, what you do is you can take off 1 or 2 right at the target. You can take one off at the 50, because that's often a reversal point as well. Or if there would be a PSR here, you could take one off there. You can take off your second one here. And because you've moved your stop losses for the rest of them, they're free riders, right? Free money. So you can let them run if they want to continue. And just keep moving your stop loss up. And you never know. You catch some of these big moves that we've seen. That's how you catch them, though, because you've been able to bank some profits on some part of your trade, and then the rest you can let run, and you're not scared of losing everything. And you've done it with a plan. That's what a trading plan looks like. And we're not talking an overall trading plan. This is a plan for each trade. And any trade you do, you should have some sort of plan like this. If you don't have a plan like this, it's just basically a gamble. So you want at least a take profit, a target, a roadmap to see where your potential obstacles could be. All these things, maybe some idea of what you're going to be looking for to get out if the chart gives you proof of certain things. Because there's certain times where I see like red light flashing at me, in the sense that the chart is just giving me so much indication that I'm not going to make it to my target, that I have to click it out. I have to get out. Or instead of clicking out, I just move my stops very, very tight, because I don't want to give away any of my profits in that specific instances. And then if it continues moving up, I stay in. If it moves slightly against me, I'm out. It clicks me out, I'm done. Those are all ways to intelligently manage a trade. But if you keep a few of the positions in and you move your stop loss, you can go all the way to the double top or your fib extensions, which will be above here. So, and those can become like, instead of making 30 pips or $30 on some of the positions, you might make $40, $50, $60. So your reward to risk then increases exponentially. And you'll end up with maybe a 50 to 1 in a full trade with all your positions and all aspects accounted for.
There's going to be a explosive morning at the London Open. I just wanted to share that with you, Laura. The EJ on the 15-minute, I've been playing this breakout box deal, is going to be, I got a falling wedge on it right now. And right at the open of the London market is where it will be out the box at that point.
Oh yeah, and they had a bank holiday in Britain today, Monday. So I'm assuming a lot of things weren't done. A lot of the volume will have to come in the same day today. So yeah, we're potentially, and there's no news events, so they can do whatever they want. There's going to be nothing to affect them. So yeah.
So I'm real excited to see how my little breakout plan is going to work today. I mean, I've been following this thing, for 3 weeks. So I mean, I'm really liking, and I'm playing, 3 markets. I'm doing Asia, London, and then New York, of course, and which I only play up to 11 o'clock when London closes on New York. So then I'm done for today. So I catch all 3 areas.
Yep, that for sure. So I'm just gonna finish up here. I think,
Was that a head and shoulders at the peak of the price there in this chart?
Yeah, I guess so. So might as well cover that. Whoa, what did I do there? So that's called your neckline. So you try to fit it so that it gives you the bottom of the head, which is this formation here, your shoulder, and this left shoulder. Now, sometimes they're tricky to draw. In a bearish reversal one, you probably want it to be horizontal or slightly upwards like I have on this chart. When they're downwards, they're harder to break and go quite drastically because it takes, they already have to make a move down before they even reach the neckline if it's going down. So those seem to be less profitable or less consistently breaking in the correct direction. But anyways, here, just the easy way, you can do it on TradingView too with the ruler tool, but you go right on your top candle, you go straight down to your neckline, you calculate the distance. So here I have like 40, and then you go to the break, not this one, because that's a head fake, where we really broke. And then you can go 400, and will you look at that? This is 400. Pretty much at the bottom. Is that close enough for you?
Holy fuck. Yeah, that looks good.
That's holy fuck, yes.
So what would be, if you had traded that or wanted to trade, what would have been your confirmation of it? Would it have been when it dipped down below that neckline and then came back up and touched it?
Yep, break hook and go. Same thing, and you probably don't see it here because it's on a 4-hour, but you can drop it on a 1 hour, or even depending on where you identify the pattern. But for head and shoulders, you probably don't want to identify them lower than a 4-hour. They don't exist on smaller time frames, guys. They may look that way. Sometimes they are the same guidelines, the same rules, the same pattern, but they're not there. To form a real head and shoulder and inverse head and shoulder, you need a lot of money coming in and out in different instances, and only big institutional traders create that, and they only trade on a 4-hour and a 1 hour. So, but yes, so here you can see we had a bear flag here. It's kind of hard to see. See, kind of a pole trade to break through it. So, I mean, I'm not sure if it's, I mean, I drew my line pretty quickly, but yeah, that's it. And then you get a pullback. So you could have played the pullback too. But this candle here was pretty strong. It's multiple ways, but if you're sure it's a head and shoulder, and if you had like normally you'll have divergences in those. So yes, we do, right? Major, like we get this high, which you see coincides with this hump and this hump of the RSI and the MACD, and then we get the higher part of the head, and then we get this shoulder, and look at how each time we're like crashing. The momentum is crashing completely. So just that, plus the pattern, plus the fact that your MACD is going negative, I mean, that enough is a sign. Now, the other thing that you want to look at for indications, and you can enter head and shoulders way before they break if you know what to look for. So you've had your first shoulder. Now, what is this? We looked at that formation earlier. Do you remember what that is?
Inverted hammer.
That's actually, the middle one is a regular hammer, because like regular hammer, just think of holding a hammer in your hand. So that's a hammer. But if you had the hammer upside down, that's an inverted hammer. But this whole thing, this bullish candle followed by the hammer and the big bearish candle is called an evening star formation. So that's a bearish reversal. As you can see, we pushed it down. Now they need to go find some more sellers. No, they go back up. What do we get? Tweezer top, close in reverse. Not a full bearish engulfing, but that's still a close in reverse. We also call them twins or railroad tracks. There's all sorts of nicknames. Then we go up a little bit further, touch our PSR. First time we touch it, rejection. We touch it again, rejection again, but then we get a bearish engulfing. Inverted hammer, bearish engulfing again, and off we go. Now pull it back, create the right shoulder. What do we get? Rejection wick, bearish engulfing. When you've seen this 3, 4, 5 times in a row, and you're creating this pattern, you're seeing your divergences, I mean, get in the freaking trade. When the charts are screaming at you, that's when you need to take the trade. When you don't need to take a trade is when you come in every morning and say, today I'm going to take a trade. That's not how it works. The trade is not always there. But when it screams at you, take the freaking trade. Trust what you see and trade what you trust. Right? So many ways, but again, if you're not sure of the ultimate entry point, build into your position. That takes away from the pressure of making the right decision exactly at the right time. And it reduces your risk. It allows you to a lot of flexibility in the sense of how you can build into a winning position. And when you do have losers that go against you right away, you lose on a very small portion of a trade versus a full trade. So that's going to improve your profitability as well. And then it allows you to build into the trade and also maybe get in earlier in some trades. And this here, you could have taken probably 4 or 5 positions on the topping formation, maybe like build in 4 or 5, 6 positions. And even here, like we start going down, what's this here? A beautiful bear flag. A break of this, build a slope, a trend line, off we go, add another position, boom. Then we go to our targets and our PSRs and whatnot. Now we start to see oversold or close to it, some bullish divergence. Let's get out. And by then we've moved their stops and so on and so forth. Not too tight, but every time we test the level, right? Because look at here. If you trade the break of this and you go here and you break through it and you move your stop right above that fib, what happens to you right away? Get kicked out and you missed half the move. Why is that? There's no big pullbacks, just wicks. Nothing to be scared of, nothing to be worried about. But if this fib was broken through, retested, got rejected and moved on to the second one, now you know this one is good. So now you can use that as support, not too tight anyways. And you trust your measured move from the pattern. You trust your fibs. So we would have had fibs like this in this case. And off you go. And you try to go to your PSRs at least and your measured move, or a good portion of your measured move. That was a beautiful setup. But I wanted to show you one last thing. It's getting late. And I'm going to try to have a few hours of sleep here before the London Open. But I wanted to show you this trade here. And I posted it in Crypto Traders Chat. Nobody answered me. I don't know if anybody took it or whatnot. But that was a perfect example of a good trade. Simple setup, slope break. So once again, this is on a 1 hour though, so it's a trade that would have played out a little bit quicker than on a 4 hour. Still a very nice trade though. So we have our PSRs. As we get this high and we get this close in reverse with the rejection candle followed by another close in reverse, then we can draw our PSR, not our PSR, our fib, sorry. And we can identify, so I put in this little arrow here. So in that case, we get the first top, but in this case here, so far, no divergence, right? Still moving upwards. We did make our first overbought. Well, I guess we had one here too, so we did have slight divergence. Well, iffy. Anyways, your first indication. That's only on a 1 hour, so... but yeah, you have that. And then you have this second high here, lower MACD, lower RSI, which is what I had identified when I shared the chart in the server. Then here we approach the lines, and what do? Bear flag. Break of the lines and break of the bear flag, off we go. Pull trade. Now, if you have a hard time seeing pull trades, put channels. I'm just going to do it quickly. Off you go. Measured move is what you use for a pull trade. So 400, 500, let's say. What do we do? Oh, there you go, 500. Look at that. I mean, it's not rocket science, guys.
And would you have set your sell point like 400 down, like your 80%?
Yeah, normally I try to find confluence, right? So we had a 786 fib here, and my 400 would have been just past that, or the 886. So where's my low-hanging fruit before those, right? And if I took the trade off these closing reverses near the top, one trade here, one trade here, one trade here, one trade here with another bearish engulfing on the break of the flag. If you got a break hook and go here on maybe on a 10-minute or something off the break of the slopes, you could have entered here again. But even then, 1, 2, 3, 4 trades. You go into a pole, you can trade the break of the pole as well, or even from the top of the pole. So you may be at 5 trades. So why am I, like, I'm going to put my target here. This is the easiest place to reach. And by then, you see we're also oversold. So I'm not going to fight that. And I have a bunch of money made already. And then we wait and we see, okay, is there a potential trade on the other direction? So far, I don't like it as much as what I saw last week, at the end of last week for Ripple. But that's just another good example of a great setup. Now, guys, you only need to find a few of these every week. Don't need to do 100. And these eventually will pay your rent. Like, these are the setups that you want to look for. And these setups are nice. Yes, you can make money trading a 5-minute chart. You can make money scalping, day trading. holding, whatever. But this allows you to make quite more like significant gains, but not having to always be in front of the charts. Like even here, you can leave the house or your computer for an hour at a time, at least, before you get another candle and another indication of something. And if you trade off the 4 hour, that only happens 6 times a day, every 4 hours. So you get a candle, you make a decision. Do I take a trade? Do I not take a trade? And then if you're in the trade, do I stay in the trade? Do I not stay in the trade? Or you've already set up your stop loss and your take profit targets and you walk away. And once in a while, if you want to, you can re-verify it and reassess, but you only have a new candle of information every 4 hours. So go work, go take care of your kids, go be with your family, go do some activities, go to the gym, go do chores in the house, go watch a movie. There's no real need to be there. What I say to most of the people I coach in trading is if you stay in front of the charts, your brain is going to play tricks on you, and you're most likely to fuck up your trade. There is no real benefit of staying in front of the chart to look at your trade go. The only thing that can happen is you fuck up the plan. You had a plan when you put your trade on. If you stay there, the only thing that can change is that you change the plan. And that's usually not good. Now, if you always have to change the trade along the way, that's probably because you don't do the work that's needed and the planning ahead of time. So that may need to change. And you probably want to fix that first before continuing to place trades that are not really planned and then having to adjust them along the way. But if you do the work first, then after that, you should be able to walk away and your trade is what, and
is that a Pareto distribution of time?
Yeah, 80-20. Well, not really. It just this way of trading gives you a life, gives you the ability to do other things, and plus that, like I said, it's not only the benefit of having time to do other stuff. Walking away from the chart and trusting what you set up is going to also improve your results. It's counterintuitive. People think they need to be in front of the charts to make better trades or make more money or make the trade go their way or manage it. And that's not true. Like if you stay in front of the chart, you're going to look at an RSI or something. You're going to see a candle. You're going to say, oh, something's happening. I'm going to click out. And then the trade's going to go $200 more in your direction. That's how it is. Your brain and humans are built with fight or flight, right? That's the behavior that we have built into us, and we're not built to take risk. Usually when we were cavemen in the jungle, if we saw a lion, our job was to fucking run. And it's the same thing. Anywhere in life, we are not coached, but kind of brainwashed or just naturally adverse. We are risk averse. It's fight or flight. That's just what it is. So if you stay in front of the charts and you're in a trade, your brain is going to try to convince you that you're taking some risks that you shouldn't be taking.
Run towards the lion?
Kind of. Well, if you can do it intelligently, like tame it, and some people can do that, and I'm not suggesting you go try that with a line. The market is not going to kill you. It might kill your portfolio, though.
Yeah.
But no, it's just.
How about this? You don't have to outrun the lion. You just have to outrun the other traders.
There you go. There you go. Just have to outrun the rest of the dumb money. Yeah.
Like
So good session, I think. We've covered pretty much everything. Good examples of some currencies that are just still there waiting. Some we had one good active setup, one that was one from last week. And that's usually what it is, guys. A lot of waiting, and then once you're in a trade, you let it play out and manage it. So it's a lot more patience than active trading normally. Any questions before I click on stop recording that may be useful for everybody else as well?
Your fib settings on MT4. I was trying to add them. I couldn't figure it out.
Yeah, I'll have to do that another time. That's going to be what I'll do probably too is I'll prepare.
I will post them. I'll post them.
Yeah, and we'll prepare a PDF document. We're already working on that of everything that we use, like our color scheme on TradingView, so that when we post a chart, we all know which colors we're using, and you know which lines mean what. Then the next step would be to give you all the tools that we use with the settings, and maybe either instructions written down or a video instruction of how to actually go in and put in those settings, or maybe even create some templates for TradingView if it's doable. I think it is, and then somehow be able to share those with you, and then let you use them. So we're going to be working on things like that. But yes, in the meantime, we can get you those settings. They're a little bit different to enter in MT4 than TradingView. Were you here when we shared our special fib settings back maybe either when the server was created, or I had done it when I was an analyst on Hyped on Crypto as well. I don't know if you were there back then.
Yeah, I have them on TradingView.
Okay, so basically you draw a fib on the chart, you right click on the little fib line, and you go into Fibbo properties, and you can add the levels here. So you click add, it gives you a different line. The only tricky part is to figure out if you have to put a minus to create the fib extension. Like you see me, I have them on both sides again, which is what you want because it gives you your targets if you're going to make a pullback and then go higher, or if you're going to just do a correction and an extension wave to the downside, like you see here. And you see here, I wrote it differently than the formatting that they had used, so I would have to fix that. So my 2.270, I think that's the one. Yeah, so it changed it. Now, actually, if I want to use the same format, I'd have to put 127. And
Did you say that you posted your TradingView version?
The version of my settings?
Yeah.
Yeah.
Okay.
But they're here too, and I'll put them on the recorded screen so you can, let's see.
I just posted the TradingView ones.
Yeah.
Thanks, Reverend.
And if you want to take a screenshot right now, Namir too, they're here, but whatever. I assume they're all the same. Yeah. These are the current ones for TradingView. Yeah, it's the same thing, entering them in, it's just slightly different. Like here, I have to put minus 0.270. But here, the thing is, in TradingView, they have the actual description of the level, which goes into the programming, the backend programming, and creates the line at the right place. But then you have the description, which is the little description that's above or below the line. So sometimes it gets confusing between the two. But you figure it out. And I normally, when you do on MT4, it doesn't have the 786 or the 886. 886 is used a lot less often, but it's still an extra level in your roadmap on the chart that may sometimes explain to you why they're turning at that specific level. But at least add the 786. 786 is used quite often. By 786, I mean 78.6. So yeah. Okay, so if there's no more questions, I'm going to stop the recording. Doesn't mean that we can't talk a few minutes here, but I'm going to stop the recording. We're all good?
Yep.
Yes, sir. Thank you.